this morning. I hope it was very useful for all the participants, but not just for them, but everyone who is following us on our Facebook page, EU versus Virus. Welcome to our afternoon session. We are continuing just as we did in the morning. We are going to have our incredible speaker for today, our expert for the business models, Akos, who is coming from Hungary. I advise all the participants that are currently live, please feel free to ask your questions. Feel free to ask Akos anything, because this is your time now to learn more about business models and potential adjustments or added that you might need to your already prepared business models. For everyone watching us live, welcome again. You are free to ask your questions also on our Facebook page below our live streaming. Akos, welcome. Thanks for joining, and everyone enjoy the session. It's going to be extremely interesting. Welcome, Akos.
Thank you so much, Natasha. Thanks for the invitation. It's really flattering that I'm considered an expert here. I rather consider myself a practitioner. I did a lot of homework in the area of business model and also finance. I am the CEO of Talkabot, so a fellow entrepreneur, and as Talkabot is an enterprise chatbot provider, and we are on the trajectory of a startup. So it's a high growth international company focused on chatbots. I think this session will be quite relevant to you, but I just renamed from expert session to like expert session because I can give you probably very hands-on experience from my practice, but it won't be a full coverage of everything that you need to know around business models. Obviously, it's quite impossible to cover under an hour. Regarding the logistics of the session, feel free to ask questions within the Zoom. I am monitoring that chat session, so I don't plan to have a fully dedicated Q&A session, although I will spare some time at the end to that. Even during the session, you are free to ask anything. I will not monitor the Facebook Live session, so if somebody else is doing that, and if you can pull in the questions to the Zoom chat window, I really appreciate that.
Yes, Akos, just
yep.
Sorry for interruption, but just to tell you, Helen is going to help you on that. So she's going to follow Facebook, and if there are any questions, she's going to come up. Perfect. Thanks.
Thank you so much, Helen. Okay, so let's kick it off. First of all, how important is a business model? Here I'm referencing Bill Gross from a TED Talk. He's a very successful investor, entrepreneur himself, and he made a speech about the single biggest reasons why startups succeed. And I'm quoting the 5 main reasons why startups succeed. You know that startup companies fail at least 95% of the time, so they are pretty fragile, but can be super successful. So what makes the success? That is the question here. You see that the reason number 5 is funding. Out of the successful entrepreneurs, 14% say that it's attributed to funding. It's an important thing. I fully agree myself that funding is not critical for a successful company. Talk about bootstrap for 2.5 years, so we didn't have any investment in the company. We only lived on client revenues and our own personal time investment to the company. I have 3 fellow co-founders who started the company, and I think the biggest, most valuable asset in the company is our own time. So actually funding is not so critical. So number 4 is the business model. 24% of the time it is essential and critical to find the right business model. I say it's a little bit interesting because 76% of the time it seems that you don't really need a business model to make it. So yeah, I think you have to keep that in mind when you listen to this session, that there are factors that are way more important. Number 3, this is super exciting to me, that you don't even need the perfect idea or the outlier truth in that. because there are other important factors. And if somebody dares to put in the chat what could be the last 2 points, I'm really interested to see if somebody's here active, or you have any tips on what's the most important. I just wait a few seconds. Okay, team, Fabrizio, everybody agrees. So probably you guessed that, you just Googled it, or maybe you guessed that it's the most important. Actually, team and the execution is indeed super important. It is the #2 factor, but there is one single item that that is on top of all this, that is the most critical, and I don't see that yet. Demand. Okay, I would say it's a bit cold. It's not demand and customer need at all, but I think the session, or this whole hackathon, whatever ton we are in, is a proof for the #1 reason, that is the timing. So there are ideas, business models, teams that may succeed at a certain time, but in another time it may be too early or too late. So I think, yeah, the tipping point. So currently with the COVID-19 situation and the whole lockdown of the global economy, I think there are great market opportunities. If you look at the year of 2008 and 2009, during the earlier large financial crisis, the companies that were established at that point of time and got funded are probably some of the highest valued companies that we see currently. So if you guys are so brave to fund the company right at this point of time, and you get funding for it, or you make it on your own, even better, then hats off, and probably you are creating a product with the right team that that is exceptional and fits the market at the right time. It's the most important. So just to kick it off, that okay, this is not that important, the business model. The timing is great, and we have the timing, obviously. I hope you get the team after 3 weeks of working together. So I try to contribute with the business model part here. The content what I brought is my real experience. I will try to give a lot of examples. Some academic background. I have a background of a master's in IT engineering, and I'm also a master of business administration. So I consulted my professor who teaches entrepreneurial finance, and asked for some content from him. I will express my own opinion, so that is my personal advice to you, and I reference a couple of must reads. What I excluded or I cannot offer is a complete knowledge. Some typos, obviously. Political correctness I cannot offer today. I'll just try to be blunt. So this is my ugliest and most important slide at the same time. It will be pretty long, so please just bear with me. The considerations of a business model. There is obviously a nice triangle that comes to every MBA presentation, and this is the business model triangle. Actually, 4 main considerations. What are you offering? Who's your team? How do you bring it to the market? And why will it be profitable? So what's the revenue model? Let me break it down a little bit more. Okay, will the presentations will be available after the webinar? Yes, I will share the slides with the team, so you will have it. First consideration, and these may sound obvious, but I saw companies pivoting from their original business model after 4 years of operation, and that's when they really make it successful. So B2B, I'm not sure who's in the audience, but B2B is business to business. I will break down all the acronyms. I really hate them, so I'll try to make it simple. Business to business model. You're a business company and you sell to other businesses. Like Talkabout is a B2B company. We build chatbots for other companies. So, for example, we consider ourselves partly a fintech corporation, not because we are a bank or we aim to be a bank, but we offer chatbot solutions for financial services institutions. We fit their needs, and we focus on that segment a lot. B2C, so business to consumer. You are a business, you offer something to an end user. The B2B2C is a more interesting concept, that you offer a product to consumers, but not directly. You bring it to market, but through another business. Let's say a retail provider or a big chain or something like that, or B2E, business to employees. This is a specific use case of B2C when you offer a product to a subgroup, not general consumers, but maybe to people who are employed in a certain industry or in a certain market segment. This is quite important to decide. I saw one of the examples I thought about when I came up with this presentation is a guy who created a very sophisticated AI algorithm that can understand expressions beyond just the verbals. It can sense the body language. It can sense the vocal tone. It can sense different aspects of my communication towards you, for example, and comprehend the meaning based on that. And he explained to me that he developed this AI. He wants to create the software, the business application around it, and then ultimately he wants to package it in a product, in a physical product, and then distribute it globally. And this guy was obviously a nerd who didn't have a business focused partner, and I saw it in him that he cannot make it. It's impossible for him to create the AI model and the business software around it and the product and the supply chain around it. So it's not in his competence. A lot of these decisions rely on your team. That was the second most important aspect, and what you are capable to do, what your founder team is capable to do. If you have experience, like I have an experience in enterprise business, I worked for Hewlett Packard for 9.5 years. I did a lot of B2B jobs with large international corporations. That's why I founded an enterprise chatbot provider, because I know this business. I couldn't bring to success a chatbot company that targets hairdressers, because I have no clue about the needs of hairdressers. Maybe I could figure it out, but I'm not real in that sense. So the next one is how you bring it to market. Is it direct sales, indirect sales, so through partners, or maybe a marketplace, or you become a marketplace? I see many companies that try to fill a gap in the market by creating a new marketplace when they need to create both the supply and the demand side, and that's how they make money. Maybe they get a cut of transactions by transacting business. This is super complex, I would say, because you need, like we take the classic example of Uber. If Uber gets into a new market, not only that they have to advertise it to possible riders, customers, but they need to find the drivers. And if any of these components fail to come to life at the same time, they make huge losses. If you are a much more fragile, smaller company, this is pretty risky. The indirect sales is also pretty risky in my experience, because you build a business, you build a product that is relevant to the market, and you say that, oh, I will just find distributors who will sell this, and they get, I don't know, 10%, 20%, whatever cut. So you practically rely on others to sell your product. But if you're an unproven business that is just starting off, it's not wise to trust other people doing this. Also talk about, we have been trying to promote our chatbots to marketing companies, to big consultancy firms, to contact center operators, and to other types of possible partners. And a lot of these relationships took 2 years. to win the first deal. We are about 4 years old, so we have some partners now. If we did the first deal and if it's successful, they get the appetite for it and they start to sell more. But to wait 2 years without proving your product market fit on the market, you just don't have the time. You will die. You will starve in the meantime, or just give up. So I would advise that even if you're B2B, B2C, whatever, you have to prove yourself. If you're selling lemonade, go out on the street, sell it, get the customer feedback, get in direct touch with your end users, with your customers, because that's how you can perfect your product. And if you're proven to be successful, others will come there and offer their help, and maybe then you can transform your business into more indirect sales, like we try to do that as we scale internationally. Okay, so what do you sell? Is it a service? Is it a license? Is it a physical product? It's highly dependent. Probably you know the idea. You have an idea of this, and it comes pretty natural. But as I said in the previous example, with the nerd who wanted to build everything from the AI algorithm to the product, that it may not be very obvious. What's my advice here is to be super focused, very lean, and just stick to it. As you build a business and as you start to have traction, there are opportunities that come up. There are people who want to help or have a great idea on how they would steer your business. Just try to listen to them. Try to somehow filtrate it through your own thoughts, but eventually you have to keep a laser sharp focus. That is a very, very important advice I'd like to give you guys, that you have to believe in your idea, you have to explain it 100,000 times, and you have to stick to it. Otherwise it will not be successful. And make it lean. You cannot focus to a very broad spectrum of things. So know your, uniqueness and focus on that. Okay, this one is an interesting one. I see more and more companies who don't build their own brand, but they offer something white label. This is especially relevant when you develop a new intellectual property. You may come up with a new recipe. You may have a good story if you're in content business. You may have some AI algorithm or some health related intellectual property. You may not have the capabilities to make it big with your own brand. But what if you offer this as a virtual good through other existing brands? I think this is an interesting thought that you guys can consider. Whether if you are currently considering to build a brand, you came up with a logo, you spent days and weeks of coming up with your slide diagrams. Do you really need it? Can you make it without it? It may not be an obvious choice. Okay, cost structure. We are getting down to business. You have to understand this very, very well. So fixed costs are things that you have to pay either way. It may be, if you're in a product business, the running cost of your factory that is quite fixed, and the variable cost is obviously the cost of goods sold. So the extra materials and services you need to add in to produce your next products. So understanding your cost structure makes it quite easy for you to come up with your revenue structure and the pricing structure that is super interesting and probably one of the most important aspects of this whole consideration slide. So what is your fixed cost? What is your variable cost? And if and when you hit the market and you start to scale and you have a peaking demand, how can you scale your business? Can you produce in China? Do you need to? Can you see the current turmoil times and how the global supply chains are vulnerable. But again, how are you prepared for scaling your business either up or down? Downscaling, again, the current times are pretty good examples. If the demand slows down, can you tune downwards your supply, your costs? Naturally, it is the most advised if you keep your fixed cost super low and just have variable cost as much as you can. So you mix the cost structure with your demand without having a lot of risk due to the fixed costs in your books. Next one, the revenue model. Yeah, this could be another few hours to speak about. Transactional is pretty obvious. If you're selling a product, people buy it. If you're selling a subscription, then you have a monthly fixed revenue, maybe a smaller number, but it's a constant revenue. And the question here, if you have a transactional business, how frequently are the customers coming back to you? So if somebody buys your product once, will that be a returning customer? Can you get a reference client based on that and get new customers? Or maybe it's a recurring client. If it's a recurring client, then can you offer him a subscription, and then you get a fixed revenue over time? So these are pretty interesting questions where I really suggest to give it a try with multiple different revenue models. Try to ask your customers, try to increase or decrease the price to see what is the flexibility, the price flexibility of the market, and just play with it. Try it out, especially if you're just starting your business now. Affiliate marketing, it is when you recommend the customer to somebody else and you get a cut, kind of a commission after that. Or ad-based, if you can generate a lot of traffic on your website, for example, then people can advertise on your website and you can practically sell the pixels, the leftover pixels on your screen, and that's how you're making money. A lot of the influencers or YouTubers, other celebrities make money out of that, but if you're making a chat platform, if you're making something that many people visit, you may offer the service for free and then sell the leftover pixels in terms of ads. Again, you may sell a subscription, like Spotify is a classic example. They have a free model where they are selling the ad space, and you have to listen to the ads in order to get the music. And if you want the full functionality, you just pay the price. You don't get the ads, and you even have undisturbed music. The last one, the 3 question marks, is something that I hear a lot from, sorry if I offend anybody, naive startuppers who are considering to start a business. And the classic sentence they say is that, oh, our service or our app will generate a lot of data and we will sell it to some, I don't know, Fortune 500 company. We will sell the data and we will make a fortune out of that. Well, you'll probably starve to death on the way to get there. It really barely happens. I really don't suggest you building your business model based on selling the data that you generate, especially in the times of GDPR. It sounds like scam. It very, very rarely happens. I just advise you not to do that. But there are obviously examples that suggest otherwise. Okay, just if somebody could write in the chat that, okay, we are listening, it's not too slow. Maybe Akos, you should slow down. So I have a feedback that other people are alive and I'm not only speaking to the room. Okay, good, thanks. Okay, the pricing structure, we mentioned a couple of ones, but but I thought it is very important, so let's give it an extra one. So freemium is a classic, very popular pricing model in the software business, in the SaaS business, software as a service, where I am at the moment. So you come up with a free tier of your product, of your offering, that people can try, can taste, and when they hook on it, when they feel that the product is so good, they want more, then they start to pay. This is super popular now. It is one of the best ones. If you can create a free tier, like a pilot of your product, then I suggest you give it a try. Classically, I'm not a fan of giving anything for free, because if people don't pay for you, there is no value in it. And if I create value, somebody has to pay for it. That is something I use as a principle in my business until 2 months ago, when COVID-19 started to break out in Europe, and then we decided to create a free version of our product called Check. This is not a point to market myself, but just to give you some background information. Check is a chatbot that automates communication between physical workers and their employers. So imagine an industrial firm, maybe a factory with a lot of workers, physical workers next to the assembly line. Typically, those people don't have an email address or laptop by their employer. They are communicated to in person, or maybe a flip chart, maybe town hall meetings, or in best case, the most digital is a TV in the canteen. So we want to put this on a chatbot, and it works pretty well. We had a nice traction even before COVID-19, but due to the pandemic situation, we offered a somewhat constrained version for free for any company that feels that they want to digitalize their internal company communication. And wow, it was awesome. So we got a lot of press coverage in the month of April. I'm from Hungary. Only in Hungary, the PR buzz that was created through this offering reached 1 million people in a country of 10 million people. We got dozens of companies applying for the free tier, and even companies that employ thousands of people, so 1,000, 2,000 people, international companies, really great brands, and about a third of them instantly converted to paying clients, and half of the remaining 2/3 are now, as the situation gets better, are really considering to convert from the free tier to paid version, and the rest have suffered so much that they practically closed down business. So there is not a real question whether they would pay for it or not, because they are not in a situation. But all in all, my principle is to give my product away only for money, because that's how people appreciate is practically proven to be wrong. It's nice to give a try of your product for people, so they have a taste of it, they have an experience. It's a fair thing, and then they will pay for the full service if it's worth. The next model, product is free, but services aren't. Classic example is Gillette. You buy the razor thing for pretty cheap, but when you start to buy the extra things, the supplies, that's when they bank the big dollars. Also, printers are the same. Nespresso, you buy the Nespresso machine for 20 euros. 20? Probably have to spend, I don't know, 50 euros for an entry-level Nespresso machine, but then you start to buy the capsules, and it's insane. It's possible also in software business or other virtual goods. This is something that may be relevant. The results-based, it's very frequently requested and also used by chatbot companies, is that you pay per transaction, you pay per chat sessions, you pay per, I don't know, milliliters, whatever you guys sell. but based on the traffic and the results that the business results that you bring. And yeah, external dependencies. I think you guys have to seriously consider that. It's everybody's mind is pretty open to new types of risks, but what is your business relying on? What do you need to do to make it happen? So when I started this business, I thought that chatbots must succeed because they are automating a repetitive task, and however much we want to give job to people, if they are not providing added value, then a software or something else will automate jobs. So this will eventually be super relevant, and businesses will adapt good quality chatbots. I come from enterprise business, so let's do it. And I wrote articles last year about, okay, if and when an economic crisis will come, chatbots will become much more relevant because of the efficiencies that it brings. And it's true, all the clients that we have are experiencing at least doubling, or in most cases tripling traffic on the chatbots, and we don't charge based on the number of chat sessions, so they just get much more value out of the same money that they pay for us. And I love it because we get new clients from that. So this is again my advice, and I don't think that anybody who is in the EU versus virus hackathon came up with such an idea, but these exaggerated first world problems, like creating the next even better quality juice maker, and there was some funny story about that last year in the Silicon Valley, if you heard it. But yeah, don't create the next even more sophisticated product for the first world. There's a lot to solve in business and technology for the large amount of masses. I'm a true believer in democratization, and I'm a true believer that technologies, that highly sophisticated technologies to which I have access to, or you guys have access to, or that are already shared with the public via open source codes, can be democratized, and you can give access to these technologies to a much wider audience. People who are not struggling due to the economic crisis, due to health issues. So I would kindly consider to focus on these issues. Okay, I stop here for a second just to ask if we should go into more details regarding any of these considerations. I have some examples in the next slide, but maybe I stop here for a few seconds. Okay, I hope somebody's still out there. So next one, good and bad stories. You decide which is good and which is bad, because they're all interesting stories. And they mostly reflect on the fact that a good business model may not be needed. You just need to create traction, and you need to have enough customers to make it big, become rich, and get closer to world domination or something like that, if you desire such things. The first story is the story of Tinder. You guys are probably users of that, or used it earlier, or heard about it. It's a very simple app to look for mostly sex partners, but I have two friends who found their wife and husband on Tinder, so it can start big things. And it's a free thing. Right now, already in the last few years, there are paid versions of Tinder where you can have access to, I don't know, hotter people, or maybe you can click more people, swipe left and right, but it used to be completely free. And Facebook acquired it for $27 per each user. So it was a multi-billion-dollar deal. Facebook paid $27 per every user they had, even if it's, I don't know, already dead person, but still has an active account. $27, billions of dollars to them. Even bigger number. This was, I think, 2014. In 2013, there was the acquisition of WhatsApp. WhatsApp is my favorite example because even if you want to pay WhatsApp, you cannot. It's a free service, and there have been really big debates about WhatsApp and how secure it is, especially under Facebook. Imagine that in 2013, Facebook paid $55. $55 after each and every user. It was a $19 billion deal paid for WhatsApp. It's, I think, really crazy. If you consider what's the cost of keeping the lights on for WhatsApp, just running the infrastructure, how much they spent on it, just to have access to these users who are encrypted, it's really strange. Next one, this may be less known, is an addictive game called Flappy Birds. This was developed by a Vietnamese geek guy, an indie game developer, and suddenly just made it huge with the game. He eventually had to delete Flappy Birds from the app stores, and then what was funny, the cell phones, the mobile phones that had Flappy Birds installed on them were sold on eBay for a higher price than the phone itself, just because of Flappy Birds. At the peak, the guy who made Flappy Birds made $50,000 per day, although he didn't have any business model. He just created a game, and since it was on the App Store, it had ads in it. And after the ads, due to all the eyeballs that downloaded the game, he earned quite a lot of money. Eventually, he had to cancel it because it was very addictive and he got a lot of frustration. But sometimes you just make it big. I see that there is one question from Tina. Thanks, Tina. She asked if you implement the prototype, but can't develop the product without data. How do you go about it to rewrite the business model? Okay, so you built the prototype, but you need a lot of data. Maybe, Tina, if you can, so you need external data to make your product work, or you're referencing my sentence about building your business model around data? Because if you meant that, and I'm not sure based on the question, so my statement around the data-driven business model was that your product should make money due to the service it offers or the benefit it offers, and don't make money by collecting data and selling it to a third party. So if you have a prototype and you need a lot of data, then again, probably to perfect your product and to come up with it, you just need to generate users. And then again, the freemium model or the somewhat free version of your product is a great way. You probably need to offer something to customers that creates value for the customers, for the users, and in return they provide you with data. This could be, I'm thinking about the virus situation again, health-related data. This is a classic example that maybe you offer to customers that if they let you process their health-related data, then you will give them back evaluations of their health status or recommendations based on other customers, other users that you have in the data pool. So I think it's a fair thing to collect data and base your product on that, but I just advise not to make business out of it. Tina, if you can respond, if this answer was relevant to you, then I would be grateful. Okay. Next example. It's from last year. This is, I think, a classic example. It's the WeWork case. Probably a lot of you heard about it. WeWork is a shared office space that has a quite nice interior design. Nothing special, but it's a nice concept, and it has free beer on tap after 5 o'clock and some community events, and there is a global chain of WeWorks, and they came up with a business model that was based on the fact that they were growing. So as long as they kept growing, they could sustain the business model. But if anything happens with their growth, they just go bankrupt really fast. And I think this is what happened to them, that they got big money investors in, even SoftBank from Japan, who is the largest venture capital investor in the world, and they burned themselves really bad with WeWork. They just poured money into WeWork to keep the wheel spinning. But at some point of time, due to the fact that WeWork had to sign leasing for office space for 5 or 10 years, but the contract for their customers for the shared office space was as short as 1 month. They actually had a very fragile business model that was obviously unsustainable from a long distance. You could see that. Still, many people, even big players like SoftBank, believed in it for years and poured tens and hundreds of millions of dollars into an eventually failing business that is, as far as I know, is under fraud investigation. I have a last example here that is just some food for thought. All these 4 examples are past happenings, but if I look at the business of the neobanks, Nubank, Revolut, Chime, N26, Monzo, depending on where you live in the EU, probably some other or one of these is relevant to you. But these companies, practically all of them, are losing money, losing big time money. They are offering really great service. I also use, for example, Revolut. I use Curve. I use TransferWise as well, that are not on this screen. But these companies are barely making any money because they offer their services for really cheap, good service, and they are also banking on the hope of growing over time and adding more services, and then they will make some money on the customers. My personal guess here is that they are hoping that some of the big banks may acquire them, and then these banks will integrate these high quality and very friendly services into their offering. But it's my opinion. Please write it in the chat window if you disagree, but it just seems to be very unsustainable. And again, the virus and the whole pandemic situation may or may not prove the worthiness of these businesses around us. I really love them, use them. I don't really keep any money on my Revolut account or TransferWise account. I try to keep it around 0, because if it fails, there is no deposit insurance on these accounts. These are collected accounts, and if they may fail, and if you have a lot of money on these accounts, probably you don't have a chance. Okay. Okay, Tina responded. Okay, thanks, Tina. So let's go on. Now the academic part comes. Oops. I will keep some time for that. I speed up a little bit. So we will have maybe a 10 minutes dedicated session. First is valuation. We're businessmen here, entrepreneurs who are considering to start a business. So eventually we need to make money somewhere. And in order to reach that, unless you start to generate a lot of profit from the first hand, you may want to raise money. And if you raise money, you're asking for some investment, maybe, I don't know, tens of thousands of euros or hundreds or maybe a few million. And how much equity, how many shares do you have to give up for that? This is dependent on the valuation of your company. And how to determine the valuation of a company that is in an early stage is as factual as witchcraft, I would say. just to give it a forward, it is really tough. You can see that probably based on the different valuation methods that are here, based on the courtesy of Professor Gábor Baranyai from the Central European University. He's teaching a full course of entrepreneurial finance, and he was kind enough to give me this slide. So there are a couple of basic approaches. Earning approach. So how much money you are making? Well, if you're not making any money, you cannot use this. If you make any money, then I normally reference the great sitcom of the Silicon Valley, where the big investor says to the main character when he wants to launch the product and collect revenue. The investor says that please don't start to collect revenue. It's a bad idea, because if you don't have any revenue, your potential is infinite. But if you start to generate revenue, it's never enough. You're not making enough. You're not growing fast enough. And then you have these earnings-based approaches. The other is the market approach that may or may not be relevant in this case, because there is no comparable situation in the world like the COVID-19 crisis. But if there is a somewhat comparable company preceding transaction, you may be able to compare yourself to a similar deal. And the asset-based approach, it's also tough, especially if you have a non-proven intellectual property, or maybe the workforce that you have. It may be a good way. Some of the things I used myself. By the way, Talkabout raised more than 2 million euros of venture capital funding. So I did a lot of homework around that. I did my business plan for 3 years, 5 years. I did my homework to create the valuation of my company, so I can effectively negotiate with the venture capital investors. So one is a funny thing, human capital based. You have a certain amount of engineers in the company, you calculate their annual salary, and you multiply it by 7. It's funny, right? I think it's a bit funny valuation method, but in companies that have maybe 50 or 100 developers, and if they are a good team that sticks together, there are cases when a big company comes in that, oh, you have 50 developers, I need it for a huge project, so I give you a lump sum of money, acquire your company, and you will work on my project, not on your own. It happens. Compare with similar deals. Again, you look at AngelList or some other database and look at similar companies and how much they are valued at in the same life cycle, similar business methods. It actually works quite well. Revenue based, you don't look at the profit, only the revenue that you are generating, and you multiply it by a certain number. There are surprisingly precise numbers that people use in the industry to determine what's the company value based on your revenue. It's typically up to 5 times. 5 times is a big number. So you may look at, I don't know, between 2 to 4 to be a bit more conservative if you are generating revenue at all. The other is EBITDA, which is earnings before income tax, depreciation of assets, and so it's a subset of profits to sum it up, and you multiply it by a number. So this is much more precise, but in many cases, like in my case, we are actually investing all our profits into developing the company. So coming up with an EBITDA is really tough. But if you are able to do that, there are, again, pretty good numbers, thumb rules that you can use. I would suggest here a number between 6 to 9, up to 9. and intellectual property based. Well, if you're holding the recipe of aspirin or some AI algorithm that is that may be able to be valued, then you can may be able to value it. But you need probably a third party to verify that. Maybe some counselor. Maybe you need to hire one of the big four consulting firms to make it relevant. So it's not easy. Okay, proposed books. You will get the slides. I recommend them to look at that. Yeah, some final thoughts. Maybe please allow me. I said all of that, but just as a recap before I open it up to the questions. Final thoughts: focus on building the product that people love. Because if people love your product, then you will get recommendations, you'll get the traction, and eventually you will make money out of it. But don't focus on the business model. Don't focus on the pricing that much. Focus on making your product lovable and good. Please do that. Second one, dare to play with pricing and different business models. Also, we did that. I think all our first 10 clients got a different pricing model until we cracked it and came up with a pricing model that we use. And even I shared with you this COVID example with the free tier of our product. It may be based on a principle that is not relevant. We have to offer something for free. So dare to play with the pricing and the different business model that people may suggest to you. Be very conservative when it comes to finances. I am a very optimistic person. I believe I want to be optimistic, and I want to trust people and the market. But when I look at the Excel sheet and the financials, be very conservative. So especially if you are raising money, raising equity, the business model that you put on the table of the investors, build in the risk reserves for yourself in terms of time, especially time, because you may reach your goals, what you planned, you may reach the traction, but it typically takes much more time and it's much more painful than you plan it ahead, whatever you plan. So be conservative. And that's my great advice. Raise funding for growth, not to cover survival. That's what we did, and that's what we tried to do. We bootstrapped on client revenues, and we could sustain the business, but we felt that the market grows faster. If we had the funding, we could grow faster. But it was great. The investors dragged the whole process for quite a long time. Especially nowadays, there's not much appetite for venture capital firms to invest. So you need to survive somehow, and you become desperate if you have to sign whatever they put in front of you because you need the money for survival. It's not a good situation in a negotiation. You will have a negotiation setting, negotiation expert session. You have to arrive with a lot of cards at hand for a negotiation. So raise funding for growth, not to cover survival. And the last is a personal one. Just quit if you don't enjoy the ride. It's very stressful to be an entrepreneur. There may be personal issues in your life, in your health, in the life of your partners and co-founders or colleagues. You're gonna have to enjoy it, even if it's a tough situation and if it's stress. Just enjoy it. I think that's a good point, because you are investing your time, you are investing years of your life to a venture, and you cannot do it just for the money. You have to enjoy it as well. Okay, that's where I wanted to close. Thank you so much for staying online. I have some questions in the chat room. No transition from freemium to premium. I don't think I fully agree, fully understand the question. So transition to freemium to premium. If somebody helps me to understand the question, then please do that. Maybe it's regarding the paid version. So if you start to pay, maybe that's already considered premium. Yeah, there is a transitional period, and there is time that you allow people to use the tools for free. Sorry, I just don't get the question. Helen, can you help me? Do you understand? Okay, I just don't get it too. Okay, that's fine. Anything else? Somebody says that great presentation. Thank you. I can see that what you share is really experience based. Thank you so much. I'm happy to read that. Okay. Now I have a question. Hello, we are app developers. I think that the pricing structure that fits more our business model is the freemium, but we are struggling to find the right balance between free features and premium ones. Do you think it is better to push customers to go premium? And we know how reluctant are people to pay for app services, at least the major part, or to chase traffic for free users to gain from advertising. What is the right balance? Okay, it's a very good question, and it really depends on your cost structure. So how can you sustain your business? I think in general, you have to really understand your customers, really have to understand who converts to paid and why, and get very much in depth to that. And you have to get a lot of data about why people don't do it, why they stop from paying. I had a fellow entrepreneur who did a great job. They had 600,000 users under 3 months. They were a big hit. Don't want to go into the details, but we were in a Techstars accelerator together in Singapore in 2018. And a lot of the job they did during the 3 months of acceleration is understanding why they became successful. They had no clue. They did not understand why people start to use the free app, and so they had a hard time to crack why people would pay for it and what do they pay for it. So I think this is the best advice I can give, to understand both the ones that don't convert and especially the ones that convert. Probably don't have the right amount of insight to that. Do you have some advice on building a B2B sales team? That's from Christoph. Well, again, a lot of dependencies, but the first dependency is market maturity, I think. So depending on the product, whether you are building the market for it or if there is an existing demand for the product, there is different focus. We are, especially with check with the internal company communication product, we are building the market, we are creating the demand. So there is a lot of PR about it, and we communicate a lot. And then I try to perfect the inbound sales process. So if somebody is interested, how do we address that person? If it's the other way around, so you have to create a lot of outbound sales, then I would advise to look at the sales cycle and definitely use some CRM, some online sales automation tool. It's not an advertisement, I don't get an affiliate link, but we use HubSpot. And by introducing HubSpot, we understand a lot better, again, the value chain and the decision chain of our clients. We try to mix and match industries that have a shorter life cycle, shorter sales cycle, so they may decide within 1 to 3 months. And then we work with companies like banks or large utility companies who typically decide within at least 12 months. As a startup, you are fragile and you may not be able to wait that long. So it's good to mix shorter, maybe lower deal value industries with longer ones. I hope this was relevant. Okay, I have a question from Hanan. What do you think will be the best model for C2C market in post-COVID times? And what features do you suggest to include? Leverage assets, staff on demand. And one more question: do you think the attention model compared to passion economy or economy will be on the rise in the incoming months? How would you launch a social media platform? How can we prototype it before the first market version? So, what would have been your advice for them, for these losing companies? Whoa, okay, big question, and I'm not sure if we have to cut it off right now. I'm happy to collect these questions and maybe send some written thoughts on it. Regarding the C2C market and post-COVID times, I would again focus on the bottom of the Maslow pyramid. So the gig economy is probably something that will stay, but filling the jobs right after COVID may not be a business that you can sustain for a long time, because there is, as you say, a passion economy. If the passion is a short-term one and it's not a part of a longer-term trend, then I personally wouldn't build a business on it. Social media platform, I would be very careful with that, to be honest. I think if you look at the trend of where venture capital firms invest at the moment, they don't really invest into social media companies and platforms, because if I look at the life cycle of this business, it's really hard to step into the market at the moment. There are probably better opportunities at the moment in the COVID crisis situation, but odds can be defined. Okay, next one. Is it viable to start a social media platform with 1,000 users? How many users do we need to make it profitable? Is it data driven? I'm really sorry, but I'm not an expert in this, not only because of the lack of time, but I don't think I could be very useful for you here. How can we test markets? That's the next question. Get non-friendly users, get critical users, even if it's some barter deal or free deal that I'm typically against of, but you have to have people using your product that's not your mom or friend or colleague. So find whatever way to put it to a test without paying the users. So you shouldn't pay them, because then it's a biased opinion. But somehow you have to package it. You can become a mystery shopper. You can do whatever you need to do, but you need to face reality at the earliest point of time that's possible. I'm not sure, Roy, if I could go into details enough, but I think we ran out of time, right, Helen?
You can take 5 more minutes to answer questions if you want.
I have the time. It's not a problem.
Yep, go ahead.
Okay. I think it was a really good question, whoever put it, about the C2C markets, the consumer-to-consumer markets, marketplaces, and how the passion or gig economy will be on the rise. I think we have to put that in perspective and give it a lot of thought about what's going to stay, how the life will change. Obviously, life will not get back to how it was before the COVID situation, but not everything that we experience as a peak demand at the moment will stay. For example, I think I just saw trends in the e-commerce industry about what are people looking for, and there is a super high demand for bread making machines at home. I don't think that trend will stay. For example, people will not bake their own bread at home in the amount as they do at the moment, at least in Hungary. So there are impression or passion based things that you can bank on for a short period of time, but I typically try to think longer and build on trends. Can you please type the name? Yes, of course, I'm happy. It's HubSpot. That's what we use. I really like it. I can recommend that. See, it's a good product and you love it, you recommend it, and maybe now many people will start to use it. There is a free version of HubSpot as well, the CRM, and there is a free tier of the sales tool as well. So they use a lot of the tips and tricks that I mentioned here. Okay, did you see this question? We use the valuation method based on discounted cash flow in the condition of constant growth. Of course, we were conservative in the estimation of growth rate. Do you think it could be a reasonable way to make valuation? Please consider that we did not find a lot of comparables, and we want to base on estimation only on the next 2 year flows without taking in consideration flows too far in the time. Okay, great one. This is a strong advice, and I think I had it on the slide. Let me check it. No, I deleted it. But after the bottom, Professor Baranyai had a statement that never use one single valuation method. Always use multiple of these valuation methods. So you make sure that the result of maybe the discounted cash flow version is valuable and came out with the good example. When you think about comparables, think broad. Think about products that are exchangeable to you. Let me give you an example. We're a chatbot company. Chatbot is a communication channel. So in fact, maybe a billboard or a TV commercial or human contact centers can be products that could be changed with chatbots. So if I want to look at comparables, I try to think broad. Please, I'm not sure what's your business, but think broader than you did before and try to find comparable companies. The other source that I would highly recommend to you is to look at Professor Damodaran. He's a great mind. I really love him, and he has a really ugly web page that has golden data, really. So these numbers that I had here, the multipliers for the revenue and EBITDA based valuation, come from Mr. Damodaran's numbers. He has region breakdown for average valuation of, let's say, software companies, of pharmaceutical companies compared with EBITDA or their revenue. And this is based on stock markets. So if you're a starting company in the pharmaceutical industry, for example, then you can see that on average, on global average or European average, what is the ratio between EBITDA and valuation, revenue and valuation. It's a great tool, and it's very exciting. You can find a lot of good content on Professor Damodaran's webpage. Last question: advices for a marketplace. Again, sorry, but I would pass this because I'm not an expert in that by far, and even worse, I don't have the experience there. So with this, I would like to thank you for participating on this expert session or practitioner session on the business model, and I will share these slides with Helen and Natasha, and you can reach me on these channels on LinkedIn, Viber, WhatsApp, Facebook, whatever. Thank you so much.
Thanks, Akash. That was amazing. Thanks a lot. I see that there were a lot of questions, which is always a positive and a good thing. That's great. Thanks, Helena, for helping out. I hope that you guys, and I'm referring to participants, I hope that you're satisfied with everything that you heard. Akash is willing to help you even with a couple of questions afterwards, which is great. And I would like to invite you to stay tuned because we are going live again in 20 minutes with our great guests from the Matchathon and the Hackathon teams, Elena, Michael, and Isidro. Stay tuned, and Matt and Yuri are going to be your hosts in 20 minutes. Thanks, Akash, and see you guys soon. Bye-bye.